Hi guys, welcome to my YouTube channel. In today's video, we are going to discuss about Tesla stock split. It might seem like a deja vu, but electric vehicle and battery manufacturer Tesla is planning a stock split. I think the fact that is the second stock split in just 2 years shows that they are in a massive position of strength and they have high class problem of 4-digit stock split, as this seems to be a smart strategic move. This video signals their intention for shareholders to vote for another Tesla stock split at their upcoming annual meeting. Spoiler alert, investors will vote and will approve the stock split, so it's just a matter of time. News has also led sharp increase in Australian stock exchange. After a cautious start to the week on Monday, risk appetite returned this morning with local stocks posting solid gains in the earlier trade. It led market with gain of 2.6%, with all powerful resources sector took a breather and banking stocks edged higher. As the founder of one of the most richly valued manufacturing companies in the history with a personal wealth of 270 billion, you would think Tesla salesman Elon Musk had much better things to do than engineering relatively share market sugar hits. But while Musk has many things, genius, visionary, and occasional ratbag, he also shown himself to be an expert in market psychology. And it's through this prism that we should see Monday's night announcement via Musk's favorite medium of Twitter, of course, that Tesla will ask its shareholders to vote to allow it to undertake its second split in just 2 years. Yet another one. It was only back in August 2022 that Elon Musk company undertook its last stock split, but the company's share price growth has clearly elicited the company to undertake a second split in many years. Since its last split was announced, Tesla is up more than 130%. Tesla made the announcement last night, which promptly saw the Tesla stock price leap on extraordinary 8% or so. The company began US trading at 1010.64 a share, but closed this morning at 1091.84, up 8.03%. Stock splits have been rage in the US tech industry in the recent years. Tesla kicked off this trend back in 2020 when it first announced its last split. This saw a 5 to 1 division of Tesla shares. This was followed by Apple announcing its 1 to 4 split. More recently, we have seen announcements from Alphabet and Amazon where they have announced 20-for-1 ratio of their own split. However, this has not been initiated yet. Why do investors like stock splits? Well, this is somewhat unclear. A stock split has a very little real benefit for the company or its investor. It simply results in redivision of company share into smaller parcels. Think of it as a cutting pipe into smaller slices. The pie itself doesn't change the size, but it has multiple slices. As an example, Tesla's last stock split was done at 5 to 1 ratio. That means that investor who held 10 shares before will be split into 50 shares after the split, with each share worth approximately 20% of what was the old worth. But even though it's just recutting the pipe, stock splits will have arguable benefits. A lower share price increases a company's liquidity. It also could increase the appeal for small retail investor. That's because it's the more affordable to buy a share worth of 200 rather than 1000. So we'll have to wait and see what the new split will look like for Tesla. But it looks like though there are more chances of Tesla on the stock market. As last night closed, Tesla shares are up 78.6% over the past 12 months and an eye-watering 1862% growth over the past 5 years. Should you invest 1000 in Tesla right now? I would highly recommend you do it because after the split, the shares can go up very high. In another news, Tesla added about US 84 billion to its stock market value on Monday in New York, more than Ford's entire market capitalization after the electric vehicle maker said it is planning for a stock split in just 2 years. Stock splits for larger companies have returned to spotlight recently with Amazon and Google. The news announced via tweet helped further fuel to recent rally in Tesla stock. The company is the biggest gainer on the New York Stock Exchange. The shares closed up 8%, the highest level since January 12. The proposal first announced on Twitter has been approved by its board and shareholders will vote in the annual meeting. The stock split, if approved, would be last after 5 years of one split. Its share price rose a staggering 743% this year and the split was cited among one of the many reasons for the gains. The plan came as company suspended its Shanghai factory amid COVID-19 related lockdown measures, and its artificial intelligence head took a sabbatical as company aims to achieve full self-driving capability by end of the year. Tesla debuted at US 17 per share in 2010. Following the 2025 to 1 split, it's trading above 1000, equivalent to US 5000 on a pre-stock split basis. While these are few details on Tesla plan, analysts weren't surprised that the announcement spurred the stock higher. Another thing which we will be looking in today's video is a website called as TipRanks. So TipRanks is basically used to analyze a stock, and it will give you a fundamental analysis of a stock, like how is it going to perform in near future or in coming years. TipRanks will also include ratings or rankings from big analysis like JP Morgan, Gold Shats, or some big top notch like blog, and these are the guys who rate stock, and their ratings can easily make a stock bullish, or it can easily destroy them. So let's look into some of the trending stocks which are like listed by TipRanks in terms of the trending news. The first one which I will be looking today is Lucid Group. It's an EV stock. So I will make a separate video on each of these stocks in the near future. So Lucid Group is EV manufacturing company based in the US. And if we look into the stock analysis for this particular stock, so as you can see in the recent days, like they have easily accomplished target of 55.52. So analysts are saying like if you hold this particular stock, it can easily soar back to 49.72%. The current ratings on this stock is hold. So if you are buying this stock, so you have to hold it for like couple of months or a year maybe to achieve the desired target. If we look into analyst forecast, so analysts are saying like from the current day till May 2023, if the market goes at the same pace, this stock will easily go at $60. Worst case scenario, if the stock is crashed or the stock market is crashed, it can go to a bare minimum level of $12. In terms of the rating, so the stock holds a rating of 5, which says like two analysts are saying buy it, one is saying sell, and two hold. So I have also bought this stock, but I'm gonna keep it for the longer run. And let's look into the next stock called as AMC Entertainment. So AMC Entertainment is a theater or cinema based in US. They are having multiple theaters across the US. This stock has also soared a lot in recent past, so they have reached a maximum value of 62.55. So currently the stock is trending at, let's say, 50% low, and as per the price sell, so currently it is minus 66.48% from the target as per the analyst forecast. So as you can see, these type of news can easily destroy the stock. So the now rating is 5, but most of the people are saying 3 hold and 2 sell. No one is asking for buy. So this means there are chances this stock can easily go down. So I will never recommend you to buy such stocks. You have to look into the rating and do fundamental analysis whenever you are buying a stock. And the lowest target they are saying is $6, which will be very bad, and their current value is located at 29. So even if you're investing $1,000 and it can easily go back to 9, so you are losing 200% of your profit easily. The next one which we will be discussing today is NEO. So this is one of my favorite stocks. I have invested in this in the recent past and I have made good amount from it. Fortunately, I was able to sell it on exactly $60 and my purchase price was 19.95, and I invested about 19,000 USDT, which turned back to I think 48 or 49, and I was fortunate enough to make good profit out of it. This stock is having smart score of 8, and it can easily go up by $44 from here, which is 109% upside. Looking into analyst forecast, The analysts are saying, so it has a rating of 17, which is a very strong rating. 15 are saying buy, two of them saying hold. So the upward trend is saying like $87. From here, it can go maximum of like $87, but on an average, it can easily go to 44.34. The average rating means that if the market performs well in the current days. On the worst case scenario, it can go to 828.30, which is around the current price. Inflammation news are coming up, so keep your eyes up because the best chance to invest when the market is crashed, or let's say in the recent days there was a war news of Russia and Ukraine, so that was the best time to buy stocks, which was here. Okay, so the next stock will be Amazon. Amazon is basically an outperforming stock with a smart score of 10, and analysts are saying it will easily go up to 4185 from its current value. And let's look into analyst forecast. So the highest forecast which they are mentioning is $5,000. The reason of it is Amazon is also recently, like, they have announced a stock split. Not sure with the exact value, but I think it will be 1 ratio to 20. So let's say you have $4,185 of worth one stock. So it will be split into 20, like 20 stocks. So instead of having one stock, you will easily get 20 stocks. And they can again soar back to the normal value. And the minimum target is basically $3,600. The next one is Nvidia. The reason why Nvidia is getting famous nowadays is because of their graphic cards or the GPUs, which people are using to mine crypto. And that market has been also going very high. The maximum stock value for this stock in the recent past was 326 USD, and it is expected that it will increase by 24.11% in the coming days, which is a strong buy, and smart score is 10. In terms of analyst forecast, the maximum price which it can reach until next year is 400. On an average, it will stay at 350. It's a good buy. Analysts have given a rating of 21, and we can see it has been endorsed by Bank of America, Deutsche Bank, which are like good analysts. In terms of Tesla, so let's look into stock analysis first. So as you know, Tesla has recently announced their split, which has sold their stock last night to $81. And in the pre-market, you can see the stock is already up by 19.83, which means today it will also jump very high. So in terms of the stock, it is outperforming and the smart score is 8. The price target is again 1053, which it will go down maybe in a couple of days because of last night news, and it soared very high, which is $81 in a day is a big amount in terms of analyst forecast. So this stock is expected to grow 1,580 USD. On an average, it can stay on the same price. And worst case scenario, it will go low at 313. The reason of this analysis in terms of low is 313 is in terms if the stock market crashes. After the split, so you will get 5 ratio to 1 of stocks. If you have invested $1,000, so you will get 5 stock, which will be worth of $200 each. And that $200 can easily go back to 500 or 600 in a matter of months. That's my experience because in the last split, I had around like 10 stocks of Tesla, and they split it into ratio of, I think, 4 to 1. And the day it was splitted, I thought it will crash and I immediately sold it, but I was very wrong. On the same night, the stock jumped from 350 to 500, like $150 increase in just a day. And this stock is also endorsed by like Credit Suisse, which is one of the biggest analysis, Mizuho Securities, and a lot of the other companies. So keep your eyes on this particular stock because Tesla is a big giant in the industry. So any news or any tweet from Elon Musk can change the course of stock market. And be sure that you sign to this particular website whenever you are buying a stock, even though they have listed Bitcoin, which is a new surprise. I haven't seen it before. Usually they are ranking stocks, but I think they have just listed the chart and that's it. It's just a news, like it's not stock like ranking. But if you see the trending stocks, basically, so you will see Tesla is on top, Nvidia, then Taiwan Semi. So this Taiwan Semi is the semiconductor which they are making for EV. Alibaba has recently like grown a lot, and Accenture, AMD is another stock like Nvidia. They are also manufacturer of GPUs or the graphic cards. So keep your eyes on this particular website, and I'll see you in next video.